Welcome back. Camp Kotok 2024. It's Bill Kennedy with the Global Interdependence Center here with Brandon Zick, a multiple time presenter at GIC events. Great to see you here in Maine. And maybe for the audience, give a little bit about your background and what you're doing.
Thanks, and really appreciate you having us. I'm Brandon Zick, CIO of Ceres Partners. We're an investment fund that invests exclusively in agriculture, and we have a farmland real estate fund as well as private equity funds that invest in various agribusinesses.
Terrific. And so your investor base will be mainly institutional, or is it institutional individuals?
It's evolved over time. It started as a much smaller fund, friends and family, small family offices, but now over time we've evolved into a fund where our largest LP base are state and municipal pension plans, endowments, foundations, large family offices. So there's a lot of different people that are interested in investing in farmland and agriculture, and there aren't a lot of vehicles to make that happen. So we tend to be one that include a lot of different investor types.
So at our shop, we think of anything ag related on the ground or in the ground, sort of as a diversifier to a portfolio. To talk a little bit about how your fund might diversify against a portfolio of public equities or public fixed income.
Yeah, there are a few characteristics that really do provide that diversification and non-correlation. One is a high income that's generated, and that's from crops that are being grown every year. Another is just a positive correlation with inflation that's much different than other areas. And you also have this very long dated asset, so it fits very well with long dated liability portfolios.
Understood. So one of the debates we've been having here at Camp Kotok this year, we're seeing inflation coming down. That's obviously had an impact on agricultural prices, farm prices, land prices. But even though CPI is coming down, inflation's coming down, prices are still high. What's happening with farmland?
So farmland prices are at all-time highs right now, and we think they're starting to plateau. But given the market dynamics of lower commodity prices and higher interest rates, we thought they should actually be down more than we've seen to date. And part of that is because there's still a lot of cash in the system. So farmers, who are the primary land buyers, have accumulated cash over the last few years. So there's still a robust bid in the market for new property or for properties that come for sale. And there's also this dynamic that very few farms sell every year. So while there's billions and tens of billions of dollars of farmland that trade, that's on a $3 trillion market. So as a percentage, only 1% turns over every year. So you have this limited supply and a very diverse ownership base. So it's not like in any given year you could flood the market with supply. It's typically demand and the availability of cash or credit that will drive farmland values. So we've seen strong prices, and even within the US, and specifically where we are more heavily concentrated in the Midwest, there's just a lot of development pressure, whether it's industrial, commercial, housing, renewable energy, data centers. There's a lot of groups with cash that are taking bites at the apple to try to acquire larger tracts of land. So all of those things in the market create a strong bid and have kept prices quite high.
And in that Midwest, what states are you investing in?
So we currently have land in 12 states. Our overwhelming focus is the Eastern Corn Belt and the Great Lakes states. So Indiana, Michigan, Illinois, Ohio, Wisconsin, parts of Kentucky and Western New York State. And while we do own farms in other parts of the country, we think that that's where we'll be investing the majority of our capital for the next 100, 200, 300 million, because we just tend to find the best value there.
Understood. So one of the topics that takes place at most GIC meetings and here at Camp Kotok is talking about trade. What's happening between U.S. and China, U.S. and Europe, U.S. and Latin America. Your business is a very global business, right? The prices are being influenced by corn and soybean. Talk a little bit about what's the current state of agricultural trade between the U.S. and China?
So trade's very important to the U.S. We export over 40% of the crops that we grow just as a nation to other parts of the world. And China is a huge buyer of soybeans and pork, and they buy soybeans to feed pork in their region. And while trade wars are something that we used to think of as a black swan in our space, what you tend to find is it just creates friction and prices are increased through intermediaries, but crops generally end up where they need to go. So while we don't like trade wars, we do think our biggest trading partners are still Canada and Mexico, and we don't think that's going to change. And while we like China as a bid in the market, we do expect there will always be political volatility and turmoil, but globally there's really just one big pile of grain that has to go from sellers to buyers. So we think those things generally work themselves out.
Okay. So you said something a moment ago about a surprise that prices haven't really responded to a higher interest rate environment as the
Right.
Fed's raised rates. Expectation is the Fed's going to start to cut rates at some point in the next few months. Uh, you think we'll be surprised again if we have this conversation in 6 months as interest rates are coming down?
We could. Now, interest rates are kind of a tricky thing in farmland because there's not a lot of debt on the real estate itself. While there is operating leverage or debt that's used within agriculture, you don't see farmers or land buyers typically buying land with 50, 60, 70% debt. Usually they're buying for 100% equity and maybe will refinance over time. So I think that those interest rates, we thought that it would put pressure on those other buyers, the development plays, renewable energy, things like that that rely more heavily on financing. We haven't seen that yet. Now, maybe lower rates will actually stimulate their demand some more. I don't know if that, I feel like we're just in an outlier period now where there's more cash fighting over fewer deals than what we would have expected.
Okay. So, Brandon, if audience wants to learn more about your firm, is there a place they can go?
Yes, yeah, we have a website, cerespartners.com, and we also have done podcast with a number of our other guests here at Camp Kotak. So there's a lot of ways to get information.
And last and most importantly, how's the fishing?
Oh, it's been great. Well, yesterday was a much slower day. Today, they were really hitting, so it's been great.
Terrific. Brandon Zick, thank you very much.
Thank you.